In this video, I'm going to be going over my trading model, and every single time I come to the chart, subconsciously and consciously, I am looking for this setup, this type of trade. And I genuinely believe everyone should be trading this because of how well it works once you have mastered it. And I'm going to be explaining to you guys how you can actually look for this on the charts, how you can take this each and every day, and the steps you need to be following in order to make this the most successful trading model you have ever traded before. I'm going to be going over a few things that need to be there that make the trade valid, and if these things aren't there, the trade is not valid and you should not waste your time, energy or money on. So the first thing is there needs to be multiple bullish or bearish candles depending if you are taking a supply or a demand. If there's a demand, there needs to be multiple bullish candles. If there's a supply, there needs to be multiple bearish candles. Now, when there is multiple bearish or bullish candles, the one directly outside of the demand or the supply has to have a fair value gap. And everything I am explaining now, I'm going to go over in full detail a little bit later on. There needs to be a breaker structure. So there's multiple bullish or bearish candles that blast up and create the zone. Needs to break some sort of structure, previous structure, to show that the market is finally deciding to switch trend. Now, we need to be above or below the 200 EMA. If we are taking demands, we are above the 200 EMA. Price is above the 200 EMA. If we are taking supplies, the price has to be below the 200 EMA. Another super important rule is that there needs to be 15 candles printed before we tap into one of our zones. So the zone needs to be created, 15 candles need to be printed on the 1 minute before tapping into the zone. And I'm going to be explaining why this is super important when looking for 1 minute supply and demands. And now we are going to be targeting liquidity as our exit points. And I'm going to explain to you guys my entry and exits and stop loss placements. In theory, this is basically what we are looking for each day when we come to the charts. These two setups that I have right here is exactly what we are looking for. The one on the left is demands, the one on the right is supplies. So let's break this down right now. The first thing that I said we are looking for is multiple bullish or bearish candles, and the multiple bearish and bullish candles on this example right here, well, in this example is a demand, so multiple bullish candles is this push up right here. This would be consecutive bullish candles, just green candle after green candle after green candle, pushing up here. And on the previous candle before the bullish candles, the bearish candle before the bullish candles, that candle needs to leave behind a gap. I'm going to put up a picture here just to explain it a little bit more and with real candles so you can actually understand it. But that one needs to leave behind a gap, and then we need to have that bullish push, and then we need to have a breaker structure. And on this example here, we had two breaks of structure. We broke this tiny high here and we broke this high up here. In my opinion, setups that break major structure are the ones that hit the most. So major structure on this example would be definitely this high up here, and I'd say this high here. Breaking ones like this are not going to hit very well, so you're going to be wanting to look for major breaks of structure, just like this high here and this high up here, which we did end up breaking. So you can see that these pushes up here broke this high there, and we broke this high up there. So that is what I am going to be looking for. So the next thing we are looking for is if we are above the 200 EMA. And on this example, I drew the 200 EMA in. It's not exactly what it looks like all the time, but this is what we want to be looking for. We want price to be above the 200 EMA. And I will show you guys how to put on the 200 EMA and the exact settings I have for the 200 EMA. So we need to be above it, and on the supply we need to be below it. The next thing we are looking for is 15 candles to be printed before tapping into the zone. So I'm going to show a picture of this in more detail just so you guys can completely understand. But we need you literally need to count. There's a tool you can use to count. You need 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. You need 15 candles to be printed before taking a trade. If it taps before 15 candles, it's invalid. Don't waste your time, energy, and money. Just wait for 15 candles to be printed. The next thing you want to be doing is targeting liquidity. So liquidity in this case would be this high up here, and that is where you would want to be holding extra positions. But I'm going to be going over my actual target, my first target first of all, and then where I would leave runners later on. What do I mean by multiple bullish and bearish candles? This is a demand zone, and we're just going to break it down. So the first thing that I'm going to go over, look in this area over here. if we look in this area over here, we can see from this like little small pullback here, look how many consecutive bullish candles we had. We had 1, 2, we had a small little pullback, and then the third bullish candle pushing up there. Okay, as you can see, the first bearish candle before the move, before those consecutive bullish candles, this bearish candle is where we draw our zone over. And if we zoom in more, this zone has to have a tiny little gap. So from the bearish candle, the top of that bearish candle, that wick, till the next candle printed, until the top of this candle right there, or the bottom of this candle right there, that is where our gap is. If, for example, this candle, this green candle, had to create a wick, and the wick would come from the bottom of the candle and tap into our zone, just like that, then there would be no gap, and that would just be considered a low probability demand zone. So we are only looking for high probability demand zone. And I'm going to break down an actual trade that I took. I took this trade live. So let's just break this down. So as you can see, we had one bullish candle. We obviously need more than that. There's the second bullish candle. There's the second bullish candle. There is, I think, the third bullish candle. I think there was one more. Yeah, there is the fourth bullish candle. So this is created our demand zone, and we're just going to draw our zone just like that. And then as you can see, there is a gap from the top of this wick till the bottom of this candle there. If once again this wick came all the way down, it would not be a valid trade to take, but it didn't do that, so we left behind a gap. So we need bullish candles, a bunch of bullish candles. We need them to leave behind a gap, which they did. It has to be right outside of the zone. The gap needs to be right outside of the zone, just like on these two examples. Then the next thing we need is a breaker structure, and this zone we had a breaker structure. We broke this high right there. And we had another breaker structure. If you zoom out and you continue zooming out, you can see that this move there that created the demand also broke previous structure here. So we broke another high up here, which gives me even more confidence. And if we zoom out a bunch, you can see that we are ultimately bullish on the day. So these are the first few things I am looking for. The next thing I am looking for is, are we above the 200 EMA? And in this case, yes, we are. Look where the 200 EMA is. Price is all the way above this white line here. We are trading above the white line currently. Now we need 15 candles to be printed before we tap back into the zone. And there's a tool on the side right here that you can click, this measure tool. You're going to click on the candle right after the bearish candle that creates the zone. You can click on that, and we are literally going to count. This tool counts for you 15 bars, 15 minutes, which would be right there. But you can literally count. You can go 1, 2, 3. There's only 3 at the moment. We need 15 candles to be printed. So I'm gonna just hit this, and there we go. So by this time here, we had more than 15 candles printed. So if it taps into the zone now, we are going to take it. But if price had to come and tap right over here, tap before 15 candles, just leave the setup alone. So as you can see that we just tapped into the zone, and there was quite a few candles. It doesn't really matter how many, if there's like over 15 candles, there could be like this example, how many candles was there? There was like 63 candles before we tapped into the zone. So there is no maximum amount, just you need to be cautious. If like zones are, like if we had a zone all the way here and price took like a day to get back into that, I'm just not taking that. Right now we're going to speak about my take profits, my entry, and my stop loss, and things I like to target. So our entry would be the next candle after this candle taps, once it breaks the high of the previous candle. So let me just explain that so it makes sense. So this next candle that needs to be printed has to break this high. Once it breaks this high of this candle, that is where we enter. But as we can see in this example, price did not break it, so our entry would move onto this high now. Once we break this second candle inside the zone's high, then we would enter. Let's see if it does that. So this next candle didn't break this high, so entry moves down to this candle high. And on this candle high, we got entry. So as soon as this candle here with momentum breaks past the high, that is when we enter. And then stop loss, I like to do this because this has saved me many times. You could put your stop loss underneath the lowest wick in the zone or the candle in the zone, but I don't like doing that. I like to give my stop loss a little bit of room because we are on the 1 minute, and sometimes price likes to retract or retrace a bit and then move up in our direction. So I like to give 1 pip, exactly like that, exactly 1 pip. So our stop loss from there, it was 1.7 pips, and I would have my stop loss at 2.7 pips, just for a little bit of breathing room, and our trade can move around by our entry and we're not going to feel very scared. Then my first take profit is at 1 to 2 risk to reward. So my first take profit at this point in time would be right there. This is a non-negotiable. I'm not allowed to close before this. I can only close after this. So once we hit the 1 to 2 take profit, I am allowed to close, but I'm not allowed to touch my trade before it. And most of the time I am holding till either full stop loss or full take profit. I don't like getting out in between. I don't like getting out at break even. I don't like cutting my trades because sometimes I cut losses and it ends up winning. I cut winners and it ends up winning, and that is just not something I would want to be doing. So I let my trade just full out, just let it play out. Okay. And then the next thing that you want to be targeting is liquidity. So after our 1 to 2 take profit, you're gonna put stop loss to break even, and then you can target liquidity up here. You could target this lower liquidity. You could target this liquidity up here, or you can target the main high, which is up there. Sometimes these are not always going to be getting hit. Sometimes you are only going to get the 1 to 2 take profit, but that is where I am mainly getting out, is 1 to 2 take profit. And if I do want to hold it, is till liquidity where I just marked. And in this example, we do fly all the way up and take out that liquidity up there. So these are just places you could hold to, but I just mainly, like I said, hold till 1 to 2 and maybe a 1 to 3 at most. I don't like really holding longer than that. Going to do another example with a supply just so people can see it and understand it again, just so I can emphasize all the rules. We had multiple bearish candles, 1 2 3. We just price kept dropping, so we know sellers like this point. Then it would be the first bullish candle that needs to leave behind a gap. We had a big gap there. We had quite a nice breaker structure. We broke this low right there, making this trade valid. And then you can see we are below the 200 EMA, price is trading below it. Then the next thing we need is 15 candles to be printed. As you can see, 15 candles was round about there, and we had like 40 candles before we tapped into the zone. So this just worked out perfectly. Then our entry would at this point be right over there, and our stop loss at 2.2 pips. If the stop loss goes outside of the zone, just put it at the end of the zone. Like, just don't try and like go like this. Even if it's larger than 1 pip, try put your stop loss just at the top of the zone. Obviously you can put it like the full, how many pips is this, 1.2, so it would be at 2.2, but I like to just cap the stop loss where the zone ends, just like that. And then let's see if we get entry. And we did actually end up getting entry, so stop loss would have been perfect. We would have held for 1 to 2 just like that, and then price is playing out just the way it is supposed to. And this is actually a loss. I just want to show you guys what a loss looked like, but this was just a beautiful trade, A+ trade. I actually did take this trade and ended up losing, but these are just the rules we are looking for. In theory, you could have actually targeted this liquidity here or this liquidity right over there, but this was a losing trade. So that is all I have got. I hope this helps. Very simple strategy. Here is another beautiful example, and I'm just going to run through everything once again. So we need consecutive bullish candles, 1 2 3 4 5 6, and then it still continued up afterwards. So we had a lot of bullish momentum, people buying in this area. We draw our zone over the bearish candle before the move, and then that candle has to have a gap attached to it, which we had right there. Then we need a breaker structure, which we had right over there. We broke a very nice high up there. Beautiful. Then we need 15 candles to be printed, and 15 candles was run about there. There was way more than 15. This one was probably like 70 something candles. Let's get tap. Okay, I've gone too fast. Hit replay. Okay, so at this point in time, once we get this tap, our entry is at that high, that candle break right there. And then stop loss is exactly 1 pip below that. So 3.2 would be our stop loss. Then we wait for entry. Okay, we actually did end up getting entry here. So we would have entered there. We would have had a major pullback. If our stop loss was below this low there, like most people like to do, we would have gotten stopped out when this was actually a winning trade. So that's why I say just give your trade a little bit of breathing room. This is what I've been doing, and it works perfectly for me. And then the trade plays around, price plays around, and then we start moving. So our first target is at 1 to 2 RR, which would actually line up with this liquidity up here. So you could just put it at that liquidity there, and we are just going to be patient, and we are going to hold this out. Now you could have put your stop loss at break even, and you could have tried to target maybe this supply up here. Maybe you could have targeted the liquidity up there. I'm not sure if it actually runs all that way. Oh wow, okay. The trade actually did run all the way there, so you could have held and made a lot more extra money. It would genuinely be amazing for a lot of people to actually see this. A lot of people are stuck on trading 5-minute supply and demand and not seeing success, and I was not seeing success with 5-minute supply and demand until I switched over to 1-minute supply and demand, and I have finally been profitable, been able to get my first payouts and withdrawals. So things are finally going perfectly after creating my own rules, I wouldn't say my own strategy, I just created my own rules, but just a beautiful strategy, and I have beautiful rules in place to make sure you are winning when you come to the charts. Make sure you guys subscribe, like, follow the Instagram, follow the TikTok, all in description, and that's it. Make sure you guys keep grinding, keep getting to the next level, and I'll see you guys in the next video.